The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 10th. Terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence. But more importantly, I am here to serve you. So feel free to pick up the phone, dial on in, 877-927-6648, internationally, 727-445-1044. Let's go ahead and get this show started on this terrific Tuesday. Of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow. She's trading up 190 points at 17,897. S&P's up about 21 points, trading at 2079. NASDAQ Composite up 48 points, trading at 47.98. Russell 2000 up about 10 points, 1127 is where she's trading at. The DAX closed up 65. The FTSE closed up 42. Gold is back $5, trading at 12.62. Silver is flat, trading at 17.09. Light sweet crude, that's trading up $1 at 44.44. If we take a look at what's moving here to the upside, you've got Transdigm Group. That's up nearly 11%, about $24. Amazon up above the highs, I believe it was earlier. That's up nearly $20, trading at $699.66. Priceline up $16. Google's up 9. Allergan up again for a second day in a row, up $7, 3.5%. You've got Dun & Bradstreet up 7 to the downside. Zebra Technologies down 15% and $9 and change. Fiesta Restaurants, I don't know what restaurant group they are, but they're down 20%. They're cooking that steak medium rare. Of course, rare is how Stevie likes it. PRA Group, that's down 18%. So we've got some movers to the down. Solar City down 24%. That's nearly back towards its IPO levels out there. Not a lot of happy campers inside of Solar City. I think you could say they're getting fried out there inside of Solar City. Maybe we'll take a look at their stock chart. You've got, what else do you have to the downside big? Coherus Biosciences, that's off 15%. All right. So what is the market doing? I know that is the first question on your mind. Yesterday, we made it about the Dow. Today, guess what? The same thing, same scenario is out there. So let's start off. Let's take a look at what the futures contracts are doing. Let's look at the daily futures contract. Let's go ahead and we'll explode up the Dow out here. And we can see that really price got right near the resistance level. The first target, 17,846 is the number. The actual intra-session high thus far, 17,840. Now, that happens to be the top of its daily TAS market profile. We can also see not that much higher above, about 30 points or so, 17,871 would be the top of the weekly box, which is coinciding with the current descending price channel. That price has been moving in ever since the highs were formed out here back on April 20th. So if the downtrend is going to stay in effect out here, it doesn't mean that we're going to see it now. It doesn't mean we're going to see it by 4 o'clock. But overnight, what we should see is we should start to see the Dow futures start trading back to the downside after they have tested this area. You know, Europe, well, Asia handed the ball off to Europe nicely. Europe handed it off to the U.S. We're doing a very good job out here of handing it back to Asia. If, in fact, we're to see these levels get taken out inside the Dow futures, again, 17,871, and that trend line gets broken, what does that say? That says all bets are off to the downside because all bets are being placed to the upside. And what that will do is you'll get right back into the swing point on the futures contract from April 21st. The low there is 17,866. You can see how close everything is really right together. You close inside that, it says you go and test the high, maybe even take out the high. But right now, that is not the message we have. Right now, we've got price trading right into resistance. Now, this means that what we need to do is go take a look at what's going on the intraday chart. So we're going to go from, let's do this. Let's go kind of reverse order. Let's go from daily to the 5-hour energy drink chart out here. So on a 5-hour chart, what this tells us, what this shows us, we also see the descending price channel. Remember, when you're using horizontal channel lines, horizontal primary trading ranges, depending upon the time frame charts that you use, you're going to end up having some different numbers because the close of a candle on a 5-hour chart, different than a daily chart, different than a 30-minute chart. You get the whole picture out here. Nonetheless, when we look at the 5-hour chart out here, the 5-hour chart says if, in fact, because we know that the bottom was formed with a nice 7th wave move to the downside. We know that the most recent top back on April 20th was formed with a 7th wave move to the upside. At the bottom back here on Friday, we saw that nice little springboard of that price moving lower, doing it with less relative weakness out there. Big old cavalry that showed up here at 2 o'clock in the afternoon. That went ahead. That was a signal that the market was done going lower for the time being. And if, in fact, we see that descending price channel get taken out, the 5-hour chart will also be saying, because it's only in wave 3 to the upside, there's no reversal signal that I see out here. This would say that, in fact, price would go to those highs. So we really want to be watching those TAS market profiles, that descending price channel. That's a message inside the 5-hour chart. If we go take a look at what's going on in a 2-hour time frame chart here for the Dow, what we're going to see is we're going to see that on the 2-hour chart, price is already broken above that descending price channel. Remember, a different candle close and open. We're using co-located opens and closes. What's a co-located? It doesn't matter to us whether it is an open or a close. We're looking for the body of the candle, which is the essence of price. So at this stage of the game, since April 20th, on the 2-hour time frame, price has already broken through that descending price channel out here. So we've got the initial indication of a break. Price comes back, tests that, rejects it, goes ahead, hits and takes out the daily and the weekly profile and gets above the 5-hour and the daily descending price channel, says you're going back to the highs. Whether you like it or not, that's what the charts would be communicating to you and I. And that's all that you and I want to do is understand what is it that buyers and sellers are communicating to us. If we look at the 30-minute chart, if there's going to be some resistance, it is now. It is upon us. Well, maybe not right this second out here, but it must be nearing because we've got an A to B equals C to D that completes at 17,847. That's your 1-to-1 out here. We can see on the 30-minute chart price has been moving higher, doing it with less relative strength out there. No bearish reversal sign yet. And without the bears showing up, prices will move higher. It is really just that simple. Support inside of the 30-minute chart. Hey, pulling back to 17,806, that would be normal. That would be nothing. Pulling back to 17,752 to 17,760, that too would be normal out here. You got to see a total breakdown in order for the markets to start heading lower. But that's just on the Dow. And hey, guess what? We've got the advanced decline indicator back above zero here. That's a bullish sign. But we'll talk about the bearish sign depending on tomorrow's trading. Steve Rhodes with TFNN. Right there.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to that break, we were just beginning to take a look at the advanced decline oscillator for the Dow out here. We're making this all about the Dow. We'll go back and take a look at the S&P, NQ, other individual stocks and so forth. But as we pointed out yesterday, it was really all about the Dow running into resistance levels. Once it cleared that, it was able to go ahead and dislodge things inside the ES and the NQ for them to move higher out here. Now that we've got the Dow up at resistance, we're focused on that. We can see, if you look in the bottom left-hand panel of my screen, you'll see the reading says 0.36 out there. That is above zero. Now, what does that mean? When you see the advanced decline oscillator get above zero, it helps us to identify potential changes in trend. I say potential because the first day up or under, in this case here, coming from the bottom, moving up over, doesn't make a total trend change. Yes, things tick to the upside, but if on the following day, it's just like a football game. If on the following day, price dips back below that zero line out here, it's kind of what's referred to as, not kind of, it is. It's referred to a simple structure, and a simple structure says one day up and one day back below, the bulls never had control of the market. Now, this is very important for you and I, especially as we take a look at resistance levels inside of the Dow. I don't want to belabor that any further because of those important resistance levels, whether it's a 30-minute chart, whether it's a 2-hour chart, whether it is the 2-hour chart says, hey, guess what? I'm up above resistance. 5-hour daily chart out there, market profiles, the whole 9 yards out here, the whole Megillah. Now what we need to see if, in fact, the bears are really going to take charge, just like what occurred back here on the trading day of, you saw a move just above it on the trading day of April 27, and then the very next day, you saw prices move back below that advanced decline oscillator reading. And so, therefore, the bears were the ones that were in control. Now, what happens if that doesn't occur tomorrow? Well, we've already got enough tools out here. We've already shared those numbers for us to watch for, that if that doesn't happen tomorrow, that's what would tell us that price would head all the way back to the highs out there. With regard to the New York Stock Exchange and the NASDAQ Composite, their advanced decline oscillators have not gotten above zero. What does that mean? That just says they're not enjoying it yet. They can. Both of these can get above zero. It doesn't look like the Composite is going to have the energy to do that today, but the New York Stock Exchange isn't that far away. In fact, if I take a look at net advancing issues, right now you're at 1544. What's the magic number? 2145. So it needs... it's going to need 2145. It would need. It's probably not going to happen today. It would need nearly all the rest of the declining issues to hop on board in order to get that to occur out here. But nonetheless, a nice market breadth day with 1500 advancing. Well, you got really 2200 advancing, 700 declining. So you're at a over a 3-to-1 rate out there. So it's a good market breadth day for the New York Stock Exchange. Okay, so we've taken a look at that. That being what the general market. Let's take a look at the. Go back to the daily futures contracts out here. I think that's where we take a look at. Now, what we can see is that if you take a look at the NQ, that's the upper left-hand panel, the ES, that is the upper right-hand panel, you can see how these guys are far away from their descending price channel out here. So in order for the Dow to bust through the levels that we took. Now, it doesn't have to happen, right? You had the Dow trading lower yesterday with these markets trading just slightly higher. So they don't all have to work in tandem, but likely they would. We can see that the ES Mini says, hey, you know what? I'm up above resistance, which was 2068, by the way, and I want to go test and tag the top of my descending price channel, which would take you up to the 2083 area. That's only 10 more points to the upside, so that's very doable. So we're going to want to be watching that overnight as well. Inside of the NQ, the number to be watching, this is going to have to just kind of gauge it, eyeball it. We're probably around the 44. We'll call it 44.44. I think we saw a stock that was trading for 44.44. So at about the 44.44 level, that is where the NQ could run into its resistance zone out there. So that's the daily out here. No real, well, I take that back. If I look at the 30-minute charts here for the NQ as well as the ES, we can see, I take that back. The NQ, of course, you don't even know what I was going to take back. So take that. But what we do have inside the NQ is we got the completion. We got the completion. You can't even let me speak on air if I'm going to use that kind of grammar. But if we do take a look at what the NQ has done, it has completed the 1-to-1 A to B equals CD to the upside. 43.84 was its target. It hit that. We've got 7 minutes left in this trading session. You're now getting a bearish reversal signal at that level. If then at 2 o'clock you get some further moves to the downside, that's a completed pattern. It says you would see a pullback. Now, does that mean that's the end of the move? No, it says that you would likely see some selling going into the last couple hours of trading out here. But you got to get not just a reversal candle in these next 6 minutes out here, but then you've got to get it in the next 30 as well. And if you get a move above a bearish reversal signal, in this case here, inside the NQ, you're looking at 43.8750. That just says you take it to the next level, just like who took it to the next level out there? What group took it to the next level? The Eagles, I believe that is. 44.02 would be the next level if, in fact, the most recent high gets taken out inside of the NQ. That's looking at the 30-minute chart out here. If we look at the ES and see what it has done, we can see price moving higher, doing a less relative strength out there. But just like we looked at inside the Dow, no bearish reversal signal that has shown up as we speak thus far. So 2077 is where it is trying to set its heights out there. And a pullback, look for 2066 to 2068 to hold as a level of support, and that is inside the ES Mini out here. Now, if the market decides to sell off the next couple of hours here, what you could also see is you could see inside that summation index, inside the advanced decline oscillator for the Dow, you could actually see that slip below zero. And then you'd have all three of these indices back below zero, where the bears are presumed to have control of the market. And we would also, because you can see the VIX index hit the target that I gave you over the last couple of days, right? That the VIX index, when it was unable to take out the 50-day exponential moving average, we said it was going to head down into that 1361 ish level. That was probably not the exact number. The exact number probably yesterday was, 1357. Somewhere right around there. But it changes day to day as more data gets sucked into the formulas out here. Right now, we can see that the VIX is trading out at 1384. So VIX has got some more room to the downside out here. What you really want to be watching on any moves higher in the market, any moves lower in the VIX index, is going to be the hammer candle from April 20th. And that low is 1250. That would be the number to be watching there. So what else can we, for the general indices, I think that kind of covers it. So that says, hey, if you've got some questions, I don't see any emails out here. I don't see any posts inside of the Tiger's Den. But, put something in there. Give me, I know, probably you want to go take a look at gold. Expect a bounce inside of gold. Let's go take a look at the gold contract when we get back from this breakout here. It's trading at 1263. Expect a bounce. And if we don't get a bounce out here inside of Goldilocks, then the three bears are going to jump on board and take that sucker lower. Dow's up 182. S&P's down 19, or up 19. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
S&P's up about 20 points. Let's go out to Denver, Colorado, and speak with Ron. Ron, thanks for calling. Thanks for holding. How are you doing this afternoon?
Real great, Steve. I have a question about Calmaine, CALM.
Yes.
I've been in it for a number of years. In fact, I started buying around 21, 22, and they benefited because of the avian flu. Their eggs never got hit by that. And as a result, egg prices took off, and Calmaine's made fantastic money because of higher egg prices, and they've been able to. But and the stock ran up there, but recently it gave some ground. And the reason I'm saying is, right now the short interest is 55% of the float. I think it's about 20% of the outstanding shares. When it's 55% of the float, is that negative or positive, or what's the significance of a number like that?
Well, you're looking at that. Really, the thing that you're trying to identify are the days to cover, and I can't pull that up on my screen out here. But look at it like this: if you have a high short interest in a stock and it starts moving higher, from the bullish stand, that would be bullish, right? Because now you've got folks that are going to likely have to cover because of the pain that is out there. But so I don't know if I would. Instead, what I would try to do is first let's understand what are the actual buyers and sellers communicating to you and I about this stock. So first, congratulations on the investment. You say you've had this for a number of years. You got it in the 20s out here. It's trading out at $48. It made a high out here of around $55 or $63, I should say, back in October of last year. And so you're looking at continuing to hold it. When you bought into this in the 21 level, it sounds like your trading plan was to hold on to this for a long period of time. You're familiar with the company. Give me some feel as to, you forget about the short interest. Give me your feel as to.
Well, they've got a very clean operation in that fact that their eggs, their hens and so forth have been not affected by the avian flu. Now they're building all kinds of places where they're cage-free. Companies, big companies like Walmart and Costco are all demanding cage-free eggs, and these guys have made about 18 acquisitions. The insider owns a bunch, about over 5% or so. But it seems like a very well-run company where the other egg companies have had problems, and they haven't.
Yeah.
Now, are these guys short because they're expecting these guys maybe they'll get hit with problems, or are they short because they think egg prices are not going to stay this high and start to come down?
Well, let's take a look at where your lines of support or resistance are, where you might want to make some type of consideration that regardless of their growing business, that there might be some other troubles out here. And this thing has, on a daily chart, what this has, Ron, has two real nice breakout areas. The first one that I'm looking at took place on April 28th. There were about 3 million shares, and the bottom of that bar is $41. And at $41, if this starts to get below $41, call back into the show, and we'll take a look and try to figure out what's going on. But that should be a really good level of support. Now, there are higher levels of support. One that is trading into that same trading day, which was the trading day of April 28th. The top of that session is 47.51. Just so happens that today's low, 47.62. So we're talking about, 11 cents away or so from that. And that had volume on that trading session, again, about 3 million shares. And today is pulling back with 414,000 shares. There is not enough sellers that are pushing this thing down. I don't know when they come out with earnings, whether that's, or whatever guidance they might give you. But right now, this area between $41 and $47 should be a really good level of support. It also has a really nice sign of strength, the secondary one that took place back in May 11, 2015. That was another 3 million shares to the upside, a nice wide-ranging bar. So with you being in at 20, with you trying to hold this for the longer term, I would first wait to see what happens around $41 out here, because the next sign of strength that you see in this, unless I am just simply overlooking something altogether, the next sign of strength, you might even add to your position.
Well, I sold some before, and I bought some more here a few months back around 50, 51, and because I still like the company, and they keep raising the dividend. I mean, their philosophy is 1/3 of their earnings they pay out in dividends, so they keep raising the dividend, and they don't have any debt, and they're only 6 times earnings. I mean, on a fundamental basis, there's reasons to like it, but.
Sure.
Yeah, I don't.
Well, and I can say that fundamentally, with regard to what the buyers and sellers are doing from a share standpoint, this 41, 47, 51. Look, it wouldn't take much for this to come down and test 46, 56, and that should be another area of strong support inside of Cal Maine foods out here. So those are the levels that I would be watching. Yeah, it's been in a little bit of a downtrend, but it's not until it starts to crack 41 where we have to say, okay, what else is going on, inside this equity? But otherwise, it looks okay to me.
Thank you, sir.
You bet. Thanks so much for calling. That was Ron in Denver. My guess is that over the last about 60 days, I've eaten a lot of eggs that have come from Cal Maine, if they're free range, because as most of you know, I've been on this weight loss program. In the last 40, I think I'm at day 47 or something like that, and 35 pounds, 36 now, I believe, and counting. And my breakfast is 3 egg whites. That's it. Sounds like very little, but quite frankly, I end up being full off of 3 egg whites in the morning out here. But they have to be grass-fed, organic. They got to be really strong egg whites out there in order for that to occur. I'll have to look and see if they're distributed by Cal Maine Foods out here. Okay, let's go take a look at, Light Sweet Crude. Let's talk about Light Sweet Crude, then we'll go back to gold out here because there was a request to take a look at gold. Light Sweet Crude trading out at 44.43. This is the weekly chart, but we'll put this back to the daily. We know that, we still have that synergy, directional synergy between Light Sweet Crude and the price of the S&P 500. You got Light Sweet Crude trading higher today. You got the markets trading higher. Nice trading range. This is a trading range leaning towards the upside. No real levels of significant areas of support. Any reason why I see that Light Sweet Crude should be moving to the upside here today. But if it does continue to move higher, if the markets continue to move higher, look for Light Sweet Crude to run into resistance around 46.30 to 46.78. Now back to Goldilocks. Let's take a look at gold. We probably won't be able to do this during the next 1 minute out here. But speaking of rising price channels out here, let's take a look at gold. Now, I did mention that gold should bounce from here. Let me turn off these profiles here for a moment. You're going to see on a daily basis, by the way, that's a daily chart that we're looking at right now. You can see the nice little trend line. You can see a rising price channel. So gold doesn't really run into any real problems until we start to see the bottom of this rising price channel get taken out. So that gives us a new target area as opposed to having to wait for these swing points to be hit or targeted, or the trading session from February 11th out here. But if we take a look at a short-term chart, well, here is just the 30-minute chart. Then we get back from this break. Let's take a look at it. You've got a nice A to B equals CD down. That has completed. You've got a nice price relative strength divergent pattern that has completed out here. And this says that gold wants to bounce. 1267.60 is the first target level for Goldilocks. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 182, S&P is up $20, Composite's up 44. We'll go back to gold. I want to do, my newsletter service is called Mastering Probability. And really, when it comes to trading and investing, when it comes to making these trading decisions, just like when Ron and I were on the phone, we're just trying to understand what the probability is of where price is going to head to. We look for patterns out here. And there may be many people that are out there right now trying to figure out how and where to short the market. And they're trying to figure out how to do it now, right now, between the next couple of hours as we go into the closeout here. Let me show you a pattern. You don't have to know anything about technical analysis. You just have to be a little visual to see what it is. And I've shared this with you from time to time before out here. There's a pattern that says, don't do it. Don't be looking that the chances of the market finishing where we're at or higher up at the close of its session is more likely than not. In fact, the probability odds of it doing that are so great that you just don't want to be sitting here trying to figure out where to go short the indices. It's just not in the cards. What do I mean? Just simply look at the candles out here. And I'm going to blow this up. This is the Dow. We can do the same thing for the S&P 500 out here. When the Dow, I think that's wide enough. When the Dow opens, and that is the low of its trading session, and begins moving higher, the chances, so you're looking at a candle just like this right here, back on the trading day of February the 12th, just as an example. Opens at the bottom, continues moving higher. Where does the session close? You can see right here where my cursor is, right? The answer, well, here's where the cursor is. I'm just moving one bar now to the left. Where does it close? At or near the session high. Let's take a look at the very next trading session out here for the Dow, February 16th. Where does price close? At or near the session high. Let's take a look at the trading day of February 17th. Where does price close? At or near the session high. Don't believe me. Just watch your eyes and just let's look at each candle session where the open is the low. I will save you more money, especially if you are an intraday trader, trying to figure out what is the approach that you ought to take. What is the trade? If you trade the Nadex platform, you will make boodles of money by trying to understand where those probability of odds are as far as where the market, and this is going to work 100% of the time. No, but let's just see how often this actually works out here. Take a look at the trading session of February 22nd, right? See that green candle? Where did the market close? At or near the session highs, right? The next time that we see that occur where the market, I'm not talking about a little bit of a move lower. We're looking at no wick, no move at all to the bottom. It opens at the low. It then starts moving higher out here. Take a look at the trading session on March 1st. What do you got? Where does it close? At or near the session high. Where's the next candle we have? See, we haven't seen a failure yet here, have we? Where's the next one? On March 11th, at or near the session high. Where's the next candle we can get to? Right here, March 18th, at or near the session high. Where's the next candle that we can grab? Right here, April 13th, where's the close? At or near the session high. And today is the most recent one that we have. Since that February, and look, you can go back and do this on your own chart and do it to the downside as well. When you have no wick whatsoever, you open at the high, it starts trading lower. Don't be doing the opposite and trying to play some type of counter trend rally out there. If you do, you're send me the money. If you want to do that, okay, now I'll figure out something to send you. But if you're looking for the probability of what the market is going to do coming into the close out here, it could not possibly broadcast to you, broadcast to me. And we take a look at the Dow. Look, here's the S&P 500. We'll go ahead and do the same out here. And you take a look at the S&P 500 again. Those candle sessions where you open at the low, you see no wick whatsoever. Where is the market going to close? So if I'm given a pop quiz, and you've just taken a look at, where do you think the market is going to close? Say in the S&P, we're at 2079 right now. Right, coming into 4 o'clock, where do we think that the S&P is going to close? At or near the session high. Not far from where we're at, and there's no reason that it can't continues to push the upside. And if you just simply utilize that one trading strategy, that one little piece of knowledge, that one piece of probability out there, and there's many, many more that I can pass on to you. Just simply come on over, sign up for Mastering Probability. But this one here, you just send me the royalty checks for those of you that are intraday traders trying to figure out what should you be doing, because the message is clear. Buy every retracement. Likewise, the exact opposite. You start to get a little bit of a wick, either the upside or the downside, then this pattern that I just shared with you, it's off the table. But otherwise, it is a fabulous pattern, and you want to use it to your advantage on days like today, which is what? What is today? May the 10th out there. Okay, so back to Goldilocks out here. So gold is up 12, it's trading out at 1267.40. When we took a look at the 30-minute chart out here, right, we saw that price had been moving lower, doing it with less relative energy down there. That's that little black line. It was also running into, on its 30-minute chart, it was running into the bottom of its rising price channel. We look at a little trend line when we looked at the daily out there. And I said, the first target's going to be this 1267 area. We're headed right into that. That may be it for gold. I don't know if that is the case. Let me switch over and take a look at let's go from a 30-minute chart to a 5-hour chart out here. And then let's go ahead and now add back profile. So let's put this to the 5-hour chart out here, 300-minute. And so here you can see the A to B equals CD to the downside. Now, you've got two bullish candles. Now, this candle that we're in right now doesn't complete for another 12 minutes. But right now, you've got a hammer candle. I'm going to get rid of the A to B equals CD pattern out here. So let me go ahead and turn that one off. There we go. And we know that price was making A to B equals C. We know the price was moving lower. It was also on the 5-hour chart moving lower with less relative weakness out there. Running into a trend line, depending on which time frame you use, could also be a channel line out here. And you had a nice little key reversal that occurred right here at 8 p.m. last night. Well, it began at 8 p.m. This is a 5-hour chart, so add 5 hours to 2000. That gets you to 21. So that was ending at 1 a.m. in the morning. So by 1 a.m. in the morning, you had a nice key reversal session. That's a bullish reversal candle. And guess what? That low was tested here during this 2 hours. And now you've got it tested and with a hammer candle out there. So as bearish as the signals are for Goldilocks and silver, they are bearish out there. They're nothing but bearish. It's not a matter of if, it is a matter of when the gold and silver are going to be taken to the cleaners out here. But as Lee Corso would say, not so fast. Not so fast. Why would that be? Well, you've got another hammer candle. We should see about. So let's just go see where the market profiles are, just to see if we can find some levels of support out here, or resistance. So it's not going to show up on the daily and the weekly time frame. So we're going to go ahead and shut those puppies off. Oh no, let's see. Yeah, we're going to shut those off. But what we're going to do is we're just going to go ahead and turn on the 5-hour chart out here. So the 5-hour chart, there we go. So the 5-hour chart shows that price also came right down into a level of support. And that level of support says what? That says 1272. If price can get above this 1266 level, is where we ought to see gold run to next. Doesn't say it can't move higher, but this market profile that we're looking at has a bias of being bullish out here. So 1272 should be in the cards for the move in gold, at least the next move inside of Goldilocks out there. So I hope that helps you out from an intraday standpoint as well. Dow's up 185, S&P is up 21, NASDAQ Composite up 47. Go back and look at your charts for the S&P 500 and the Dow. You go look at those candle formations that I shared with you, and then send the royalty checks, care of Steve Rhodes, to TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. A request to go take a look at Sonus Networks Inc. SONS is the ticker symbol. Our trader is long from $8.12 out here. So at $8.12, nice trade. It's trading right now at about $8.69 out here. Sonus Networks had a really nice day. Maybe this was an earnings date out here. I don't know if that is the case out here, AG, but on the trading session of April 27, you had 1.8 million shares, so you had a nice move to the upside. It went a bit higher the very next day, 945,000 shares. You are now coming into that swing point with light volume. That likely says, though, that, and it may, that swing point high may not get tested, AG. It's also run right into, there's a new market profile that formed after that trading session. Again, that was the April 28th session. And that new market profile says 872 may be all that is in it. So you're pushing into a swing point. You're doing it with light volume, and you're running into the top of a daily profile. Does that say sell? I don't know what your trading strategy is. I can tell you're up against resistance. Now, what's interesting on this stock chart, if we didn't pull it back further to the left, we would miss out on this. Now, I do not know what took place on the trading. This is a weekly chart that began the week of March 23rd, 2013. But it is the resemblance of the word ugly when we take a look at a stock chart out here, because it was a gap down of humongous proportion. You had volume of 29 million shares out there. That means, and that went from a high of 1449 down to a low of 786. And remember, you are trading right now at 869. This says, if I were your pilot, I trust you. Even if we were flying in a G5, I would say fasten your seatbelt out here, because you're in for some turbulence. There is a ton of shares that traded during that time period out here, and folks are just going to be happy as pig's feet. Can pig's feet even be happy out there? But they're going to be happy as you know what, to be able to get some of that money back out here. So just be careful when you take a look at SONS, because that's a son of a gun when you take a look at that March 23rd move to the downside out here. So I'm glad that I went just a little bit further back to the left-hand side of the chart just to see what else could be running in the way, and that is SONS Networks. Doesn't mean it can't move higher, but you are up against some nasty areas out there. Let's take a look at Amazon. Let's go see what it is doing out here. Up $22, up 3%, taking out its previous. Well, I think it's taking it out. Let's go take a look at it. Its previous swing point. Now, let's get rid of market profiles, because my goodness, it is up above everything out here. So those no longer are resistance. And this thing here, this thing being the stock equity out here, it most recently made a high back on December 29th. Now, of course, the volume that we're going to look at there, pretty hard for us to figure out what the real volume is, but it was back on that trading day, 5.7 million. You're at 4.2 right now. Should have enough volume by day's end. 696.44 is the number. If this closes below 696.44 at the day's trading session, you will have a failure of a swing point on price and volume. However, in order to get so-called bearish, if you want to talk about being bearish out here, you've really got to reject the swing point altogether, which would be moving back below 677.89. In the case of Amazon, it should have support at that little rising price channel out here. Nothing looks bad. The only thing that would look bad is we're going to do a good job of handing the ball off to Asia. And if Asia just totally fumbles the ball and all of a sudden futures just are getting croaked in the morning and Amazon gaps down, you would have an island top reversal at all-time highs inside of Amazon. That would not be a good thing. We've got island reversals inside the NDX, so it's worth paying attention to and noting. Hey, folks, stay tuned. Our man David White is up next. It's terrific Tuesday, not terrible Tuesday. Then we got Tom O'Brien, Andy Heck to take it on home. Don't remember, where's the market going to close today? The S&P and the Dow at or near its session highs. Have a great day, folks. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.